Hello Wontox, it's me from the Monetary Policy team here at the Central Bank of Papua New Guinea, and I am here to give you an overview of monetary policy. So, in simple terms, monetary policy is the control of the money supply and credit conditions in the economy to influence economic activity. So, monetary policy is set by the bank's board, which is the highest decision-making body of the bank, and the board has the responsibility to set the policy interest rate, which is the rate that we lend money to commercial banks. We also set reserve requirements, that is the amount of cash that commercial banks are required to hold. And we also use our open market operations to influence liquidity conditions in the economy. The goal of monetary policy is to maintain a stable and conducive financial environment for sustainable economic growth and development. And this is in line with our vision, which is to become a world-class central bank that drives sustainable economic growth and improves the quality of life of Papua New Guineans. The past 2 years have been very challenging for the global economy, and the COVID-19 pandemic has had significant impacts on our local economy. To date, the global economy is still experiencing significant disruptions, including the recent banking sector stress and the war in Ukraine, which continues to push up global inflation. In advanced economies, inflation has become entrenched, and central banks are now focused on bringing down inflation expectations to avoid a wage price spiral. In the US, for example, the Federal Reserve has increased its policy interest rate by 5 percentage points since March last year, and they have also started to reduce their balance sheet. Similarly, other advanced economy central banks, such as the European Central Bank and the Bank of England, have also embarked on aggressive monetary policy tightening. Here in Papua New Guinea, our monetary policy stance is dictated by our commitment to the full float of the kina and our inflation target of 3 to 5% under a floating exchange rate regime. The value of our currency is determined by market forces of demand and supply, and our monetary policy operates solely to influence inflation within our target range. Since the beginning of this year, we have seen some developments in the foreign exchange market that have put pressure on the kina. These developments include a weaker than expected recovery of the economy, subdued export earnings due to global commodity price weakness, and higher than expected import expenditure. In this environment, the bank's board has decided to increase the policy interest rate by 25 basis points to 4.25% to bring inflation expectations to the medium-term target of 3 to 5%. The decision to increase the policy interest rate was made after carefully considering the latest global and domestic economic developments and their potential impact on the domestic economy. We recognize that there are downside risks to growth from both the global and domestic fronts. However, we believe that the current level of the policy interest rate is appropriate to contain inflationary pressures and to safeguard the purchasing power of our currency. In addition to the policy interest rate hike, the bank will also conduct a series of open market operations to remove excess liquidity from the economy. This liquidity tightening will help to reduce upward pressures on the exchange rate and prices in the economy. Furthermore, we encourage commercial banks to lend more to the productive sectors of the economy to boost economic activity and create jobs. Banks can do this by reducing the cost of borrowing and increasing the availability of credit to businesses and households. Please visit the Bank of Papua New Guinea website, www.bankpng.gov.pg, for more details. Thank you for listening.